recording. There we go. Just so we're set up there. All righty.
You can remove question number 10.
10. Okay. Yeah, if there's anything in there that I didn't cover, I was trying to keep it general for just everybody to get a sense of what Cash Flow Capital Club is.
Yeah, that's great. I like that.
I didn't want to get like too specific with it. I'm sure we'll get into it at some point. I figured I'd just keep it general.
Yeah, we've this is a learning process for us too, because we get into the we are so used to speaking directly with multifamily operators and get taught that lingo, and then we realize we just sounded like a bunch of robots. No one
No, I catch myself doing the same thing like when I record the episodes, because I really like to get into the specifics of it. But the goal for my podcast is to more or less give people content, so that if they see my website or they scan my business card or anything and they see that I have a podcast, it kind of like instills confidence in people, especially like new clients. That's kind of the goal. But at the same time, a lot of my friends on Facebook are also agents, so trying to balance like the specifics of everything with like, how do I word this for like the regular person? Yeah, just like a regular Joe Schmo, that's interested or whatever. So I don't know. It's fun though. I've only been doing this for about a month. I just do one episode a week, and it's super fun.
That's a lot.
Yeah. That's pretty good.
Yeah. So today will be episode 6, I believe.
Nice.
And I'm dying. There's a talking point on here, and oh shoot, I should have just pulled up the PDF. I got my computer caught a virus.
Oh no.
It's like taking me 5 minutes to open up. It is so stressful.
That's okay.
Longer than that, it's not even opening.
Yeah, well,
I've got it open on here. Do you want me to look at it?
PowerPoint. Let me see. I'm going to try one more thing here. Here we go. Here we go. It's coming.
Now, we met at that Christmas party, is that right?
Yes.
Okay.
Yeah. Just briefly.
Yeah.
I've sat down with Ryan one other time before that, right after you joined the Dallas office. But I'm excited for today to see what this is all about.
I'm excited to open up this PDF. Let's see. I got this little time. Okay, there it is. It's open. There's a thing in here, because you asked a very good question, but I want to make sure I articulate it correctly.
Okay.
When you ask the question about how does it compare to the different investment vehicles?
Yeah.
And there's a contextual thing that people should always think about when they're investing. Is not just the returns, it's the risk associated with that asset class to generate those returns, right?
Yeah, definitely.
So which points you to a thing called risk-adjusted returns.
Okay.
Measured by something called the Sharpe ratio. So you want to, ideally as an investor, you want the least amount of risk with the most amount of returns, right? So the higher the Sharpe ratio, the better.
Okay. That makes sense.
It's returns over risk. And the multifamily asset class, compared to all the other asset classes, large cap, small cap, bonds, commodities, REITs, is far superior on a risk-adjusted return basis.
Okay.
You can look that up, research, documented, and so forth. But I want to write that down.
Yeah, definitely. No, I think that's a good one to touch on. Because I was on your guys' website yesterday just trying to see what information you had on there so that I wasn't being too redundant in my questions, stuff that could be easily answered. but keep it general enough so that people who haven't visited the website can at least get interested and learn a little bit.
Yeah. So our whole goal of what we do and doing these podcasts and things are to reach out to more people who would like to join us on these endeavors, these investments, right?
Definitely.
And a lot of people aren't aware that they can participate in something like this. They just think it's too big for them. They don't have the money for it, because we're buying assets that are worth 20 and 30 million dollars, and we're asking people to be a partner with us, right? And
yeah.
Most people are like,
but a lot of money.
We're working with investors who are investing like $50,000.
Oh, interesting. Okay.
At a time.
Yeah.
People are using their IRAs and 401ks, doing a self-direct into these things. So we wanted to open up to people who want to invest in real estate, do it in a much better, simplified, easier way.
Yeah.
This type of investing for a long, long time has been reserved for private clients, ultra high net worth, Wall Street type, and has been sort of a hidden secret for most people, and still is. You'll never have a advisor bring you an opportunity like this. Most people will never get access to a private equity deal, which is essentially what this is. But anyway, because we've been investing our whole entire lives, and this was hidden from us for most of that time. And now that we have access to these opportunities, it's rewarding to be able to share it with other people.
Yeah, definitely.
Working together, it allows us to accomplish more, and we get to help people in the process. So it is a symbiotic
save some of this for the
relationship. Anyway, I'm just letting you know, like,
that's awesome. That's awesome.
And all of that. So can you hear us okay? So we're all set up.
Awesome.
I'm gonna blow you up.
Okay.
Let's see. I got these two numbers putting down right here because I want to hit on that.
House is doing.
Yeah, I'm all good on this end if you guys are good.
Okay.
Okay, perfect. Well, let's just get straight into it then. So you guys own Cashflow Capital Club. So how did we get started with this? Kind of what was the inspiration for Cashflow Capital Club? How did you guys, get started with everything?
Yeah, Cashflow Capital Club. What we are a commercial real estate multifamily investment company.
Okay.
What we're doing is we're buying underperforming asset classes in multifamily, which are small apartment buildings, essentially.
Okay.
50 to 200 units, typically mom and pop run. And we significantly increase the value of these assets and generate high returns for our invested capital with very low risk. Yeah. And we work with investors who want to join us in these ventures, and we do that via partnerships.
Okay. Interesting.
Capital partners, that's what we do.
Yeah.
The inspiration for this was when we were doing it ourselves. There was only so much we could do by ourselves.
Sure.
And when we come across an opportunity that's outstanding, but we need help in order to do it, and that's when these partnerships help people who want to invest in real estate, and operators who are finding opportunities working together to generate very outstanding risk-adjusted returns.
Okay, interesting. And so how are you guys adding value to these assets? I know this isn't on our question sheet or anything like that, but that is one question. I'm sure there's going to be a couple that come up, as we get through this episode and everything. But how are you guys adding value to these kind of mom and pop run smaller apartment complexes and everything?
Right. There's commercial multifamily differs from residential real estate.
Sure.
And the valuation, how we value each of these asset classes, right? Residential, more of a speculative play. You're hoping the market is going to do what it did in the past, right?
Yeah, definitely.
When you sell it, it'll be at a higher price than what you bought it. That's what you're hoping for. In the commercial space, how you add value is by increasing the income of that asset. So you
Okay.
have rents, you have expenses. What's left over is your income, your operating income. And when you buy a commercial multifamily, you're not really buying the building or the asset, you're buying an income, right? And that income is determined, or the value of that income is determined by what they call a capitalization rate. And there's two ways we can increase value, increase income. One is by renovations. The other is by improving the operations. So we are specifically value add through operation, like value add specialists via operations. We're looking for poorly run assets, mismanaged assets, where we can pinpoint the direct line items. And those are typically rents being way under market. Not much on the expense sides, where we can significantly boost the net income of the asset and instantly increase the value of that asset. Very straightforward.
No, that seems pretty straightforward. Like you said, there's only, there's two factors there. It's expenses and income. And if you can raise one and lower the other, then your net bottom line is going to be greater, either way.
Yeah. So
I was just going to add that by doing it in these that size of apartments and staying in kind of generalized areas, we're able to keep those expenses lower than we would if we were to just try to do it, as a duplex or smaller, because we're able to scale it and keep those expenses relatively low from that standpoint.
Okay. Yeah, that makes sense. So how did you guys, kind of going back to the inspiration for Cashflow Capital Club, was this kind of a team effort? Did one of you come up with the idea first? Was it kind of just like a realization as you guys had mentioned you had already been investing in these kind of assets? Did it just get to a point where you're like, well, this kind of makes sense if we kind of start this for other people? What was the, start of Cashflow Capital Club?
Yeah, so it was kind of the latter, like you're saying. We were doing it ourselves, and we would be having conversations with friends and families about what we were doing, and we were kind of not surprised, but a little bit that there was so much interest in what we were doing, and people saying, how do we do this? Can we participate? And so it kind of came about organically, like, okay, this is a thing that people want to learn about and want to participate in. And so let's make this a more formal way to try to, do that for people and bring other partners in.
Interesting.
Once we discovered the appetite for what we were doing, that kind of caught us by surprise. We weren't sure how many people would be interested or who has been investing in real estate and wanted to do it in a better way. Once we realized the appetite for these investments was there, because the returns are just phenomenal. They're fantastic. And the risk is relatively low.
Yeah.
Of course, people would want to join us. So once we realized it felt selfish to keep it to ourselves, we kind of had a moral imperative at that point to start sharing this with people who we want to work with. First, it started with friends and family, then our network, then mutual relationships, both in real estate and her profession. I mean, she's working busy physicians who frankly don't have the time to shop real estate on weekends, right?
Yeah, definitely. Yeah, no, I think that, a lot of people kind of look at real estate investing as a big, scary monster, but everybody kind of wants to do it. And so it's cool. It's cool to see what you guys are doing. You're kind of breaking it down into a very easy to digest kind of piece and be like, hey, we're here to help you. We're here to work with you. We kind of, take over everything. And so my assumption is that it's more on the passive side for the people that invest with you. Is that correct?
We've done it. We've done it many ways. But most of our investors are passive. It's what people want. We're dialed in. We're full time. We're multifamily operators. The system has been built. The people are in place. The opportunities have been found. So the work is taken care of, and it is a lot of work. These are actively managed businesses that we are running. And investors want a good return on their money in a way that makes sense.
Sure. Yeah.
So but there are opportunities on smaller deals to have joint ventures. That's another way we can do this. But most of our opportunities that we've made available are via syndications.
Okay.
Where we have general partners who are the
Mhm.
operators,
Mhm.
find the deal, take on the debt, assume the risk, working with limited partners,
Mhm.
investing together and owning a stake directly in the asset itself.
Interesting. Okay. That seems like a pretty good setup that you guys have got going. And Ryan, I know that, you and we're in the same office together. Do you still do, single family residential real estate, or have you transitioned fully into this multifamily kind of asset management? Because I'm kind of curious what the natural progression of that is, because I think that a lot of agents eventually get into the investment side of things, whether they are representing investors or they become investors themselves. So I'm just kind of curious what your transition was. Is this now the full-time kind of gig and then it's residential on the side, or, what is the kind of layout you've got going?
Yeah, I mean, time is, our a limited resource, right?
Sure.
There's
Yeah.
only so many places you can be.
Yeah. Yeah.
I am in multifamily full-time 100%.
Okay.
Service residential occasionally as
Yeah.
needed for people who need it,
Yeah.
or existing relationships.
Yeah. Kind of that
Still
sphere of influence they always
licensed,
talk about.
but the multifamily space, there's just so much opportunity and so much
Mhm.
work required.
Mhm.
We can't spread ourselves too thin.
Sure.
Francesca, you can describe what you're doing.
Yeah, so I mean,
Yeah.
I work full time as a
Mhm.
physician, and so
Mhm.
I represent more the limited partner kind of. I'm the liaison, if you will, to that,
Okay.
because that's what I was, and technically still am.
Yeah.
And so what we found, especially with physicians that want to keep doing their job, but that they want ways for passive income, like Ryan said, where they're not having to do stuff on the weekends or manage a short-term rental or whatever the case may be.
Mhm.
And we're hoping, and that by providing some of that financial freedom, that then it allows doctors, and again, I'm including myself in that,
Yeah.
or any professional to do their job well and not have that extra added stress,
Sure.
on top of it. And so it
Yeah.
definitely has helped a lot of people in that way.
No, that's awesome. That's just like Ryan said. You don't want to spread yourself too thin, because then you're not providing value in the right places, essentially, to the people that, are kind of relying on that and taking on that risk of, working with you guys. They don't want to have to worry about anything else extra and be like, well, I don't know if they're committed or not. That would not be a great, business practice or anything. So speaking of physicians and everything, do you guys have like sort of a niche clientele base, or is it kind of everyone and anyone? Because like you said, you're kind of the liaison for, the general partners and everything. So it's geared, Cash Flow Capital Club is geared towards working individuals that don't necessarily have the time to, manage a real estate portfolio. So I'm just kind of curious kind of what the clientele base looks like for something like this.
Mm-hmm. Yeah. I mean, I think it has been a lot of physician investors, mainly because that's
Mhm.
who I'm around, and that's
Yeah.
who my colleagues are. But
Mhm.
we don't discriminate based on
Yeah.
occupation.
Yeah.
So
No, that's
we
awesome.
take all comers, anyone who's interested
Yeah.
in it, for sure.
Yeah,
Interesting.
and also we have physician investors, but we also have real estate professionals.
Okay.
Many who are investing with us specifically because of the tax advantages
Mhm.
that are accessible by specifically real estate professionals. That tax designation,
Yeah.
you would qualify as one. I qualify as one. I mean, they
Yeah.
are humongous, and you
Mhm.
get those in multifamily. You don't get them as much in single family investing,
Yeah.
and it is very, very meaningful. It's a conversation you'd
Sure.
want to have about bonus depreciation, cost
Mhm.
segregation,
Mhm.
wiping out personal income with your
Yeah.
tax advisor.
Yeah. Yeah. Exactly.
If and how you can
Mhm.
qualify.
Yeah.
I mean, we do,
Mhm.
physicians do, who have
Mhm.
passive investments and
Mhm.
in other activities in medicine.
Yeah.
But basically, we're looking for people who want to invest in real estate
Yeah.
and do it in a very meaningful, profitable way
Yeah.
without taking huge amounts of risk
Mhm.
and putting a lot of stress
Yeah.
and work on their plate. I mean,
Yeah.
we've
Yeah.
worked with investors who dabbled in the Airbnb, and then they
Mhm.
realized they're running a one-man hotel,
Yeah.
Yeah.
unperforming, or they're even in single family.
Mhm.
We have a lot of events. We're going to have future events
Mhm.
where economies impact renters, and
Sure.
you're in a single family home, you lose
Yeah.
a tenant you lose your ability to pay the money you borrowed to buy that property.
Yeah.
All these single family things, they pencil great. They're great investments. It's how we got started.
Sure.
Right.
Sure. Yeah. You got to start somewhere.
Yeah. And we didn't have to start there, but
we didn't know any better, really.
Yeah, exactly. I think that's kind of the default, path that people take is they go, I want to, get into, real estate investment. So they go buy a house to rent it out. And then, like you said, if there's an economic event that happens where, somebody, they maybe get priced out of their rent because they lose their job or something. All of a sudden your business. Yeah, exactly.
Or a kitchen fire.
Yeah, exactly.
Or a pandemic.
Yeah, exactly. Like all these things. And all it takes is that one person to move out, and then your business, because real estate investing is a business in and of itself. All of a sudden you have zero revenue. So I could definitely see that by scaling that up, and you've got now 200 doors under management that you've invested in. One person moves out, it's not a huge deal. That's really nothing. That's a drop in the bucket at the end of the day.
And single family residential, great investment over the long term, but you better be significantly bankrolled for those events. Events will happen. It is guaranteed they will happen. Some capital expenditure that is unexpected will wipe out all of your cash flows for the entire year. Next year, it's going to happen. It happened to us. Some people can manage that, and some people can't, and they figure it out along the way. The little $100 and $200 cash flow positive a month per door is really not enough. I mean,
that's paying dinner, twice a week, maybe, or twice a month, I should say, maybe. It's really interesting to kind of see, because like I had mentioned earlier, like a lot of people look at real estate investing as a big scary monster. And I think a lot of that comes from like what we're talking about with economic events and single family homes and everything. But when you think about, oh my gosh, how am I going to manage an apartment complex? It seems like you guys really kind of got it dialed in to where everybody's kind of collaborating in the best of ways to make it work so that, somebody doesn't have to take out, like you said, $20-30 million to purchase this apartment complex and, hope for the best, hope that they know what they're doing enough to actually run this thing. So it is interesting. So I'm kind of curious. It sounds like you guys got started with Cash Flow Capital Club pretty quickly once you kind of realized the opportunities and the advantages of doing this multifamily asset management. So what was the timeline of kind of getting started, kind of, getting off the ground and getting to the point where you are today?
It was a long time. There was a long time to get this started. And because your story about everyone being stressed out about the scary monster and being able to wrap your head around the complexity of an apartment building, it's overwhelming. It takes a lot of time. Not everyone has that time. So we knew multifamily real estate was where we wanted to be because of the returns, because of the risk-adjusted returns, because of the profitability and the opportunity. So we started our education like 10 years ago.
Oh my gosh.
Reading the books, going to the seminars, doing the things. And then, but being able to find, run, finance, all these different pieces. I mean, while you're working your full-time job, it causes a little bit of paralysis. And because we had a do-it-yourself mindset, right? It's like, how are we going to do all of these things? So we start it's like, okay, let's do single family because we can execute on that. We can do a single family like this weekend, right? And make that happen. But always kept going with the multifamily research, looking into it. How can we do it? And our big breakthrough moment where we accelerated our growth and where things rapidly happened was working with other individuals to fill the gaps that weren't in place. We realized that multifamily really is a team sport. You can do that through partnerships or through good hires, but you don't have to reinvent the wheel.
No, and there's a system out there that's been working for a lot of people. And, it works for a reason. So why not take advantage of that and kind of tap into that side of things? Like you said, don't reinvent the wheel. You don't make it too complicated. It's, it's only as complicated as you make it.
Yeah. And so our background, my background specifically was analytical.
Mhm.
I do everything in an Excel sheet,
Mhm.
but multifamily is a relationship game.
Yeah.
It's all about relationships, both operationally and finding these opportunities.
Mhm.
And then working with people to make them happen on the
Mhm.
investment side as well.
Yeah.
So once we started forming good, solid relationships with people who have been doing it, that's when things just rapidly accelerated for us.
Yeah.
Mhm.
Yeah.
And now we know that it's counterintuitive, but the
Mhm.
larger the opportunity, the easier it is to do everything.
Yeah. Yeah.
Mhm.
Yeah. It's just
Um,
kind of getting over that mental hump at first, I
Mhm.
assume,
yeah,
of like, oh my gosh, this is a huge, complex or whatever, in terms of like what you guys tend to invest in. If it's on that
Yeah.
upper echelon of 200 doors,
Mhm.
versus, the one you bought previously was maybe 25 doors. That is a huge jump. And it's probably a little bit of a scary moment to look at that and go, okay, I guess we're, really getting into this thing now.
Definitely.
Definitely. Yeah. So, that's kind of our history. Our
Mhm.
hand was forced a little bit into multifamily because
Mhm.
there's only so much you can do in single family
Yeah.
residential, and you'll hit a ceiling quickly
Mhm.
in your W-2. And there's
Mhm.
a thing called a debt to income ratio.
Yeah.
We bought one, two, three.
Mhm.
We're getting ready to buy a bigger personal home and another investment property. And your
Mhm.
lender will say, hey, you can do one or the other, but you
Yeah.
can't do both. And we're like, why? We have the money in
Yeah.
the bank. We're ready to go. What's the
Yeah.
problem here?
Yeah.
Yeah.
Our credit rating is great. It's like debt to income ratio. We hit that
Mhm.
pretty quickly. Some people hit the 10 unit or 10 single
Mhm.
family
Mhm.
ceiling. And then to keep going that route, you have to take on the out of the box lending
Yeah.
opportunities to make that
Mhm.
happen, which we
Yeah.
weren't comfortable with.
Yeah.
So the next step was participating as on the limited partnership side
Mhm.
in multifamily. Through those relationships, led us to being multifamily operators.
Yeah. Yeah. No, that makes sense.
And then
Yeah,
it kind of did snowball a little
it did
bit from
snowball
there.
after
Yeah.
that. One
Yeah.
deal led to another. One group
Mhm.
of investors led to another group of
Mhm.
investors.
Mhm.
That the again, the investment appetite in the
Mhm.
marketplace for this type of thing, working with people
Mhm.
who people can feel like they know, trust, have a good working relationship with,
Can relate
Yeah.
to,
can
Yeah,
relate to,
exactly.
was
Yeah,
was
because I
pretty.
mean, it's not like you guys are a huge corporation. It's the two of you. You're very personable people, and people can actually go meet the face of Cash Flow Capital Club. You can go out to lunch, you can sit down, you can get coffee, and I think that's a huge part of that relationship building, and also the exponential growth that comes with, I think, building relationships naturally. Because I always reference the 6 degrees of freedom, I believe it's called, where you're only 6 people away from any connection in the world. And a lot of that just ties into, if a group of investors that is, maybe 5 people that want to invest with you, chances are they probably also know 5 people each. And so all of a sudden, this one lunch has turned into potentially 30 more people that want to invest with you. And so I could see that exponential growth happening very quickly once you kind of got started with these larger assets, like you said, kind of taking on the big, scary, 200 unit, and just kind of getting over the mental hump of it all. So I had another question for you. So as far as different investment vehicles, um, how does Cash Flow Capital Club differ from, say, like a 401k, a bond, a REIT, investing just like in the stock market? We talked about commodities a little bit before we, got on this call and everything. So how is this different? You've mentioned risk adverse or, risk adjusted investment quite a few times. So I'm kind of curious what, that turns into.
Yeah,
Let you answer that.
we can talk about how there's two ways, when you're looking at asset classes and opportunities.
Mhm.
Structurally, when we offer up an opportunity, we're offering up a share class
Okay.
to have a direct investment in the asset itself, similar to like when you buy shares in Apple,
Mhm.
right?
Mhm.
That share class is limited, so you share in the returns, but you don't have to deal with the operations similar when you buy a stock on the market. So we're not a fund.
Okay.
And we get to cherry pick the opportunities. And once we have them, then we go and raise the capital for that opportunity, see who wants to participate in it or not.
Yeah.
Right.
Yeah.
From a risk return profile, this is an incredible asset class, specifically multifamily asset class. Because when we invest, we want a good return, but we don't want to take a lot of risk. It has to be some relationship there where you have a return over risk ratio, right?
Yeah.
You want high returns and low risk.
Yeah.
That ratio is called the Sharpe ratio.
Okay.
Google this and look this up and look at Sharpe ratio and how it varies against different asset classes. The commercial multifamily asset class blows away everything else.
Interesting. Yeah.
Relative.
Yeah.
So you're getting the returns above and beyond what you get in the equities market, large cap, small cap offerings that are in the S&P 500, for example. But your risk is almost as low as municipal bonds.
Interesting.
And for that reason, it's a spectacular investment. So that when we say risk adjusted returns, we're talking returns that can outperform other offerings that your financial advisor would put in front of you for way less risk.
Yeah.
I mean, it's not even close. And oddly enough, REITs are on the opposite end of that spectrum.
Is it? Okay. A lot higher risk, lower return.
Exactly.
Yeah. Yeah. No, it's interesting because I was trying to figure out, last night when I was preparing for this and everything, a lot of people talk about, saving for retirement or investing or, I've got this much in my 401k. And, those are all really popular investment vehicles because they've been around forever. But I don't know that many people necessarily know the Sharpe ratio of their 401k or their investments or anything. I'm sure, their financial advisor has an idea of that and can hopefully get them into some sort of, low risk investment portfolio. But I think the average consumer or the average investor is probably just going with popular picks, just like you said, S&P 500, things like that a lot of people tend to invest in. So it is interesting to kind of see this. It's almost like a newer, I don't want to call it new because multifamily has been around forever, but a newer way to invest into multifamily that is super beneficial, it sounds, to everybody. That's awesome.
Yeah, it's just becoming more accessible.
Yeah, that's the word I was looking for. Just
people.
A lot more accessible.
Francesca and I have been investors our entire professional lives. I started my career on Wall Street. Many of my clients were hedge funds, private equity firms. But we never got invited to participate in those investments. We had the same investment opportunities that everyone does, right? We go to Fidelity, we pick this index over here, maybe a hidden gem sort of Motley Fool thing over here, and single family homes, and then we dream about being able to afford like a 5-plex or a 6-plex. Something like that. And the good stuff were traditionally saved for private clients, ultra high net worth individuals. It was sort of a closed, a closed space.
It's kind of the secret club that nobody gets into.
Yeah.
And then once we discovered this, and as an investor, you're looking at the returns and you're looking at the simplicity. You're removing the speculation, and the business plan is easily executable. Being able to do this for ourselves, we were happy to share this with our friends and family. Once we got the feedback in investments from them, it just kind of realized what we were dealing with and what we had.
I'm sure once they see the potential, once they see the actual, tangible kind of gain from doing this with you guys, it's probably a pretty quick decision to, let's, invest again. Let's do this again. Let's tell a friend, this is a good kind of deal. Sorry, go ahead.
I was just going to add before you move on. I think another important difference that a lot of people like with this type of investments with multifamily compared to your traditional stocks, bonds, 401ks is that transparency, which you kind of touched on of knowing, okay, where exactly does the return come from? If I invest in Fidelity, I'm kind of trying to guess how they're,
Yeah, exactly.
going to bring me money back. But
Yeah.
with our deals, I mean, we'll give you as much information as you want. We actually do walk through each line by line item of, okay, this is what the rents are. This is what our goal is. This is our timeline, so you can actually see and understand, and it's tangible, like you said, where that value is. And a lot of people do like that, knowing that and being a little more involved on that side.
Yeah, part of the fun of what we do and what we offer is that educational aspect of multifamily and sharing this with how it works. So we run an investor operator relationships where it's inform and enrich, right?
Yeah.
That's we want open transparency. We want people to understand and get excited about the opportunities. And we can only do that by sort of going through the details of how everything works. We want to work with people who have a similar mindset to us, similar goals. And so we're going after the same objectives. And who is this for? Just to be clear, our average investor is in with us for $100,000 to $150,000 in investment. We've had investment opportunities open to people for as little as $50K. And not only are people using their personal, funds that are in the bank, we've also opened this up to individuals who have stuff in their retirement accounts, IRAs, 401ks, and introducing them to a way for them to self-direct into these types of opportunities. Because again, the options available to many people in IRAs or 401ks are limited to the products of that administrator. And being able to self-direct is very straightforward and simple, and people are participating that way also. So this is very accessible to most people, and for much less money. I mean, like you want to invest in real estate here in Dallas and you want to be in the highest appreciating area. Get 300,000 minimum ready for a down payment, repairs, all of that. Do something that's more attractive for 50K. It says a lot about, it's like, okay, that's doable.
Why not, kind of thing. So we are running a little bit out of time here on my my Zoom recording. It tells me I've only got 2 minutes left here. So I want to wrap this up really quick before we get shut out. So where can people find some more information about Cashflow Capital Club, connect with you guys, just kind of get some more of these details and maybe have a conversation one-on-one with you guys?
Go to cashflowcapitalclub.com. Cashflowcapitalclub.com. You can request an invitation, speak directly to us. We love hearing investor stories, what people are looking for, sharing what we do. We like being accessible. We're allowed to do that. We work with a limited number of investors. And find out more about us there and connect directly with us there.
Awesome. Well, thank you guys so much for joining me today. It was wonderful having you on. It was a ton of good information and everything. And I'm super excited for you guys getting this started, and hopefully you guys continue to exponentially grow.
Thanks, Jack. Appreciate it.
Of course. Awesome, guys. Thanks so much.